and welcome to the Neighborhood Money Podcast, a video podcast about personal finance and helping you build the life you deserve. If you're new here, I'm Cavan, that's Drew, and we are here every single week to talk about, really, Drew, just everything and anything money. And for this week, we're going to talk about what the heck's going on in the markets. I'm sure everyone's very much aware of how whether it's a retirement account or their brokerage accounts are dropping basically off of a cliff. Depending on where you read, we're either doomed or heading into a recession. But Drew and I wanted to come this week and just talk about, where we're at, how we got here, and then, some of the things that you guys might be able to do to kind of weather through this type of environment. And then we'll kind of wrap up the conversation with specifically what we're going to do and try to give you some of our thoughts, and maybe you can help. Maybe you could implement them into your own plan. But Drew, before we actually dive into the content, if you want to support this podcast, you can do that in a couple of ways. One, please leave us a 5-star review if you like our content out on Apple Music. That helps us a ton. Also, subscribe on YouTube if you're watching over there. And if you get value out of this video, hit that like button. All those things definitely go a long way in helping us grow this podcast. And we also have some links out to some of our recommendations. Right now, we've got books, but we're going to be adding more. So that's both found on our socials. It's found on our YouTube description, down in the description below, as well as in the podcast episode description. So with all that being said, there's a lot of different areas that you guys can go out and help and support us, and we greatly appreciate it. All right, Drew, that was a lot. That was a mouthful. So let's dive right into the topic.
Yeah.
Drew, what the heck is going on in the market right now?
There's a lot going on with the market right now. This is something that some people might look at as like an Armageddon or something, but this is kind of that market correction I've been thinking is going to be happening for a while now. I thought it was going to happen probably about 2 years ago, and now it's like slowly found its way to catch up. Just like year-to-date numbers, the S&P 500 is down almost 15%, or a little over 15%, and the Dow Jones is down just over 10%. So as even though these stocks are down 10, 15, the Dow is down 10%, S&P down 15%, if you zoom out, you'll definitely still see that it is a market correction, but we are higher than we would have been, or than we were 2 or 3 years ago. So it's just one of those market corrections, and I don't think you should be extremely scared for
it. Yeah, I completely agree. You hear a lot that, we're doomed. The markets are tanking. But Drew, I get really excited about these types of environments. We've only really have lived through two, and kind of this is really the first one that might be prolonged. So if you think about, like, we had the 2020 correction that basically was a 30% drop and then instantly bounced back. But then before that, you're kind of looking at the great financial crisis that, at least for me personally, I wasn't invested. I was in high school. I was doing kid stuff, right? So this is really the first opportunity where, if you are investing, you I get really excited because I'm buying all these assets that I truly believe in, whether it's an S&P 500 index fund or it's Bitcoin. Everything's dropping right now, but I'm buying all that stuff on a discount, at least in my eyes. I'm staying strong through, and I'm sticking to my plan. And yeah, I get super excited right now because I know, even though it's hard to see your accounts drop, if you can think long term and look at that picture and take that step back, like you were saying, man, it's pretty exciting, to say the least.
Yeah, unfortunately, you'll hear one side say it's from certain politics and from certain sides to the other politics. Unfortunately, the reality of it, these are just like ups and downs that happen. It sucks definitely to go through them. I'm not extremely happy. I'd want the market to be doing much better. Obviously, it's not doing that. But these are just one of those environments that you have to take the ride and see if you can get some type of opportunities. But when you're talking about maybe a little bit more prolonged, downturn or slower increase, I think I agree with that. I probably jumped the gun a little early during that first little crash back in March of, was that 2020, or I think it was, with that check mark recovery, I think is what some people will call it. And I initially thought when that dropped, I was thinking stocks would come back fairly reasonable, but then it would probably plateau and then start selling off. But it kept going up and up and up and up. And I think I jumped the gun because I thought this market correction that's happening now was going to happen about 2 years ago. But it's just one of those things that you have to live with. And I want to say, looking back on it in hindsight, it's interesting to see probably one of the biggest drivers for the market to continue to grow in that last year was the inflow of money from retail traders and just the ease of getting into investing.
There's a ton of different reasons why we got to where we are today, right? You're right that the retail traders were had easier access to get into the markets. That obviously propped it up a little bit. But one of the bigger things that got us to this point in time is the fact that when we went through COVID and you had those few rounds of stimulus, whether it was direct checks to people or was the government buying bonds through quantitative easing, all of that, what that ends up doing is that just pumps money into the economy. And when money gets pumped into the economy, that just means more money exists, which means that prices of things are going to increase. Obviously, we've talked about inflation before, and I'm sure you guys are well aware of that, but that includes in asset prices. So not just groceries are more expensive, not just gas is more expensive, but money gets pumped into the markets. And so that's why you kind of saw the S&P 500 had two really good years when we went through a crisis because we had all this influx of money. And so now we're kind of going on the opposite way. Like Drew, you said, we're in a correction that was bound to happen. It's probably no surprise to everyone, but one of the main drivers of the correction is the fact now that the Fed is raising interest rates kind of prohibits or at least deters spending. Think about, like, if you're going to go out and buy a car, you're probably more likely to buy with a 2% interest rate rather than a 5%. Same thing with the house. Granted, houses right now are still it's crazy market, but and then you also have quantitative tightening on the Fed, which basically just means that they are no longer buying bonds, which means that they're not pumping money out into the economy. So those two things are saying, whoa, 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 money is now being taken out of the economy, and that's to try to curb inflation. But as a result of that, you're going to see some of these asset prices continue to drop.
This has just been the accumulation of what's happened over the year. All those items that you just spoke of, I think they're starting to really come to light where now that interest rates are increasing, that money that we had in stimulus is already spent. People maybe don't have the same jobs they did before. Maybe they lost their jobs during the last couple of years. Now there's kind of no more or not as much money being able to put into the economy. And the unfortunate truth is any of those all that money from retail traders that went in during the last couple of years because of all that excitement and didn't matter where you put your money in, you were making money during these corrections. The unfortunate truth is you end up having a lot of panic selling and they see their portfolios go down. They got into stocks that they weren't 100% comfortable or really knew what they were. They just heard the hype of them and they just see their portfolio go down and down and down. And then they end up selling these individual stocks and the money flows from the small retail trader into the big institutions. And I think right now what you're seeing is that money flow transferring and these big institutions slowly starting to take some cash off the table to the side, waiting a little bit further for their bottom that they're probably going to be the ones picking, and then they're going to start accumulating again.
Absolutely. And it does hurt the retail investor, but it also hurts those of you that are saving for retirement, right? Most retirement accounts are invested somewhat into equities or bonds, and bonds are getting destroyed right now. We won't go into that because that's a little bit more complex, but equities and bonds, basically anything you're going to invest through your retirement account are getting hit right now. And so, Drew, what does that mean for people that are listening to this podcast? What are some of the things that they can do knowing that we've seen a 15% drop in the equity markets? Bonds are at historic lows, and basically anywhere you put your money right now, you're going to lose at least part of it.
This is kind of one of those questions that it just really depends where you're at in your situation. I guess one situation you could say, do you have a lot of years till retirement or are you close to retirement? The other scenario is, do you have a lot of money set aside to be able to invest or are you kind of strapped? If we're going to go with that side of it of we're not looking at time horizon. We're just seeing, do you have leftover cash to invest, or are you just kind of strapped and you still have your money in the market? If that's the case, this isn't financial advice or anything, but my opinion is you just kind of have to stay the course and continue to do what you're doing. If you end up selling now thinking that the market's going to continue to go down and you're going to buy at the bottom, it becomes extremely risky because you don't know where that bottom's going to be. And if you saw, like it was 2 years ago, if the market decides to take a swing and to the upside, it can be a matter of hours or just even days, and you're just stuck of, now I have a higher cost basis than I did before, plus I took a loss. So if it's kind of strapped for money, I would say stay the course. If you're putting in per paycheck, continue to do so. If you want to continue to do that dollar cost averaging, it tends to be probably more beneficial just because you can slowly add to it. You're not really worried about where the market is, and you're not trying to time the market. I know from experience, it's almost impossible to time the market. So that's one side of it. If you, you do have a lot of money set aside, just make a plan of seeing where it is you want to put that. If part of it is building up that emergency fund that we've talked about in the past, and part of it is maybe I want to spread out this extra cash over the next couple months and have a plan to put that to work maybe once a week or twice a week.
So here I got a little bit of an example. Not that I timed the market because I don't. I dollar cost average every single week or every other week, depending on the investment I'm buying. But to give you a sense of how trying to time the market can impact you. So when I moved jobs, I decided to roll over my 401k to my new employer. Fees were better, etc. That doesn't really matter. But I was out of the market because what you have to do is sell your assets and with your current employer or former employer, and then that gets transferred over to your current employer for them to manage it. In that matter of like 3 or 4 business days, I actually lost $5,000 because the market dropped. And so you can see that trying to, that's just one example. And I wasn't even trying to time the market, but you can kind of get a sense that, if you think things are going to change, more than likely they're going to go the opposite direction. And I think that's evident because every time I buy Bitcoin, Drew, it drops. So maybe I should just make an announcement that, hey, I'm buying Bitcoin. Maybe you guys should hold off for a couple of days, but only kidding, of course. But the fact that,
Isn't
timing the
that the
market's just so
truth?
hard. Yeah, it really is, isn't it? Like
I
you're like
honestly,
all
everybody I like follow on social media, and then I even feel it myself. It's the moment I decide to sell, something will go the opposite way, or the time I decide to buy something, it goes the opposite way, and then you always feel like you're the only one, and then you go out on social media, and then you'll see people be like, "Sorry, everybody, I just bought the stock, so expect it to go down," and
yeah.
it's just pretty hilarious, just because it does feel like that at times.
It's impossible to time the market. And so more than likely, specifically if you're dealing with money that you're going to need in the future and it's not money that you can lose, dollar cost averaging is going to be your best bet because you're not timing the market. You're going to buy high, you're going to buy low, and you're going to buy everywhere in between. And that's going to give you the average of how the market or whatever asset you're buying performs, which I think is a really, really good step forward, specifically in these times, to really just stay the course. But Drew, one thing you mentioned was your time horizon. And I think that's a big one, right? Like it makes a whole difference for people like us, Drew, that are in their 20s compared to someone that's in their 50s or maybe even in retirement, drawing down from their assets. It's a completely different ball game when you get closer to when you're actually going to pull it out. Because for people like us that are putting away money for retirement, that we're not going to touch it for a couple of decades, it doesn't matter how the market moves. We're just going to keep stacking assets so that we can draw it from in when we get into retirement. But kind of when you're putting that on its head, you know, you when you start drawing down in retirement, it does make a difference if you're drawing down when the markets are down because you're drawing your assets at a lower price, thus giving you less income each year. So I think for those people that are either getting closer to retirement or maybe in those retirement ages, I think now is a really good time to get on that budget to really see where you can reduce spending, specifically if you're drawing down assets that are invested.
We've said it in the past a lot too. Planning has to be a huge part of it. If I was getting close to retirement and I saw the market the way it is right now and I was starting to have to draw out of the market, it would be putting pencil to paper and really figuring out, make sure all my debts were paid off as much as they could. If they weren't, really figure out what my monthly needs are. Maybe I wouldn't be going on quite as much of the, say, vacations or going out to eat quite as much in my retirement those first year or two, and just kind of see where the market goes. Because as you said, once you start drawing out, you are getting your distributions and you're selling off part of your assets that you won't be able to put back into the market because of your living expenses. So it's just one of those risks. Some people may be in a better position where it's part of, it's kind of baked in, and they just kind of go from there. But time horizon is definitely a huge one. It's something that you have to look at and really make a plan to see exactly where you're going to be putting this money to work for you.
And to take the budgeting one step further, even people that are younger that are investing into the market, getting on a budget and maybe opening up some more of your income to invest at a lower price might be a really good option. You don't see these types of environments too often. You get them roughly once about every 7 to 10 years. But if you think over the course of your working career, that's what, 5, 6 times that you get to buy in these types of environments. And so it's a really good opportunity. If you can get down, get your budget really drilled in and say, hey, you know what, maybe for the next 6 months, I'm going to open up an extra 50, 100, 200, whatever it is per month to get it invested into the markets.
And if I can add anything to this section of this podcast right now, is I've been on a big kick lately of finding multiple streams of revenue. And I don't know what it was that kicked my mind into that, but that's kind of another avenue to go towards if your time horizon is getting close to retirement, or you're kind of in the middle or early stages. I guess it doesn't matter what stage. Maybe it's an opportunity to look for other types of revenue streams, whether it may be rental real estate of single family homes or Airbnbs, or maybe you do some type of affiliate marketing, or you find some type of side hustle or side business that you like to do. Because if you're getting close to retirement and your only source of income is coming from your 401k or retirement account, that can be almost putting you in the same position of being employed by somebody and being fired the next day. So I think it's beneficial to potentially think about these other types of revenue streams that, or side hustles that you can cash flow in, that are recession proof and can still cash flow nicely into bull markets as well.
I think that's just another way of just saying have a side hustle, like make more money, right? Like just get out there and do what you're passionate about and try to monetize it. Because when you're doing stuff that you're passionate about, it's not work. Well, it can be work at times for sure. Don't get me wrong. But if you can have that extra income, then you're not relying on that sole primary, whether it's a job or it's your retirement account. And you can even have, it doesn't have to be a side hustle, Drew, for example, right? Like when you're in retirement, you could have a 401k, and then you could also have other different types of accounts that are drawing in from different types of assets. And that's diversifying and having multiple streams. So there's a lot of different ways to do it. It doesn't have to be specifically work. Although finding that cash flow is very nice. I totally agree with you. But there's a bunch of different ways to diversify your income, especially when you get into those later years. All right, Drew. So the last section here that I'm probably most excited about, because it's really what we're doing in this type of environment. So we wanted to talk about, what are we doing to maybe help you guys get a sense of what could you consider. None of this is financial advice, of course, but we thought it was a good opportunity just to say, hey, this is exactly what we're doing. This is our plan, and this is how we're sticking to it. So, Drew, do you have any thoughts here? What are you doing with the crazy market that we're in?
I'll start off with, I guess, education, and it just trying to figure out what the current state of affairs are right now. For example, today I ended up listening to Biden speak on current inflation crisis. You didn't necessarily say crisis, but that's pretty much what it was going for. And just some of the summaries that I took away is, um, I guess, long story short, is we have no plan. But if you were to go back and just do a bullet point of what it was, I'll give you guys a summary. It was inflation was caused from the pandemic, and he called it Putin's price hike. And then it went on to uh, saying Republicans don't have a plan. And then Biden's plan was to wanting to say the corporations have to be taxed and pay their fair share. And he wants to give a bigger tax break to lower income families and decrease the deficit. So I guess his plan, I guess if I do want to say, I guess I can take back and say he does have a plan. His plan is to reduce the deficit, and that's going to reduce inflation. So there's a little bit of back and forth. Obviously, it's politics. He'll say one thing, Republicans will say one thing, but at the end of the day, those are kind of the spark notes. And so I think education was the first part of my plan during this type of environment.
One thing that, is pretty apparent is that regardless if it's Democrats in office or Republicans in office, like the Fed, this is their job. It is to lower interest rates and then have quantitative easing when they want to ramp up the economy, and then when the economy gets too hot, they have to ramp it down by rising rates and doing quantitative tightening. And so it's kind of just the system that we're in, and there's all the hoopla of politics. You kind of have to look past that. Maybe this example is not a great time because, right, like we did have all the stimulus money from both sides, of course, but that obviously left off to high inflation. But just try to avoid like the name blaming, right? Because that gets nowhere. Just know that like this is a system that we're in. It's normal. These are cycles that we experience. And, hopefully the people in charge, whether it's politics or the actual people in charge at the Fed, can get under control and hopefully not put us into a recession, specifically a deep one.
So I guess like we're going back to kind of what the things I'm kind of doing is I'm trying to stay educated on the current set of affairs. The second thing is now that my strategy for trading isn't much day in day out, it's a lot more of the swing trade. So a little bit longer time horizons. Whether I'm holding for less than a year or even some of them maybe a little bit longer than a year. Uh, what I'm trying to do is not time the market. I'm trying to look for equities or cryptos that I think are at a discount right now. And I want to just kind of slowly increase positions where I can. And then thirdly is I'm trying to look for more cash flowing revenue streams, and it doesn't have to be $100,000 or $50,000. I'm just fine with having a couple streams that have even a couple $100 a month would be pretty awesome, just the cash flow that I don't have to spend 40 hours a week at. I can spend maybe 5 hours a week and get a couple $100 and then slowly be able to grow that. I don't know why I've been on, like I said, I don't know why I've been on such a kick of that. I think a lot of it is some of those memes out there is they always like that one of Elon Musk saying he bought Twitter because he didn't buy Starbucks every day. And then it just gets me thinking of, you know, budgets and personal finance are the foundation. They're definitely everything that you should put together in your personal financial product. But then only way to really grow is to invest or find other streams of revenue. So that was really a big kick in my butt, and so that's like another stream that I'm trying to look at. Those are kind of my three would be education, more or less a dollar cost averaging, and then trying to find multiple streams of revenue.
Dollar cost averaging and then diversifying your income is huge here. uh it doesn't even have to be multiple streams. Even increasing your income, for example, right, it could be beneficial in these times. It might be hard to increase your income at your job, right, depending on how your company does in this type of environment, but being able to have more income allows you to invest more, allows you to grow more of those assets, which ultimately builds your wealth. Drew, I think, specifically what I'm doing is I'm just keeping the course. Hannah and I have a pretty well detailed plan. and we're just following it through. I will say that we are putting a little bit more into Bitcoin. And so, buying every single Friday morning is when we buy in. I know some people do it daily, some people do it monthly, but it's every single Friday. I put in a market order, and that, that fulfills if, well, it does fulfill every single time. And then we have our retirement investing that just automatically goes in each and every time. We're not changing the type of investments. We're staying strong with those because we believe in them. And we know that because we believed at them when they were 15% more expensive, we should really believe in them now at 15%. And so really, it's kind of a boring uh, example of what to do, or it's a boring summary of what to do, but we just basically are sticking to our plan. But I think that's really important to be able to build a plan that weathers both good times and bad times, and you can just stick to it, because then you don't have that added stress that comes with trying to figure out, oh, what's a better plan because this one's not working. And for us, that's, it's doing really well so far.
Altogether, it might seem like the Armageddon type of moment, but even like you say, it can be a boring strategy, but it's the boring businesses or the boring strategies that are able to weather these so-called Armageddons. But like I said, be able to zoom out and actually see the progress that's going. Obviously, nobody likes to see their portfolios go down, but anytime you talk to anybody in the financial sector, at least, they know that they have these market corrections. There's ups and downs in the market constantly, and right now we're just going through one of those phases, and it may be a little bit more prolonged than the previous big downfall, but or kind of crash. But this is something that will slowly be coming back to as big money starts having a plan of where they want to put their money, and then start accumulating and putting more money into the market, which will then increase the economy. And hopefully, these supply shortages will be figured out to help decrease the price. So hopefully, inflation can go down. People can have higher wages, and our debt kind of starts going down.
So I think at the end of the day, it's just don't be fearful. Like, these things happen. Just stay the course, stick with your plan. If you don't have a plan, develop one. And that was a really good time to make sure that you keep your head level, because it's when you start trading or operating off of your emotions, that's when you really feel the hurt, specifically when you're looking way long term. So just keep the clear head, right, Drew? And then just stick with the plan. So even with all the craziness of what's going on in the market and all the stuff that, we've talked about, all the stuff that you and I personally read in our Twitter
Yeah.
feeds or whatever on our social media accounts, putting all that aside, what else is going on in the neighborhood?
Well, I was involved in a little bit different type of craziness, and it's called Bieber fever.
The
I
Beaver Fever. So you made it down to the concert?
Yeah, Justin Bieber played in the cities this past
Nice.
weekend, and I wasn't planning on going, my wife and myself, and I think it was on Friday night. The concert was at started at 7, and by about 6 o'clock, my wife turned to me and said, "The tickets dropped by like $200. Do you want to go?" And to be honest, I didn't really have a Mother's Day present, and it's her first time mother, so I thought that was an easy way of saying, "Yeah, let's just do that." And then I was kind of off the hook, but still could be entertained. So that
So
we
your
ended
first Mother's Day gift just fell right into your lap.
sort of, yeah. So, but it was like start at 7. She said that about 6 o'clock, an hour before, and I think by 6:30 we had our tickets and our Uber scheduled, and we got to the concert by about 7:30, so about a half an hour later than it started. But there's always those headliners, and Justin didn't come on till about, I call him Justin. We're buddies and everything.
First name basis.
First name basis.
We hung
Uh,
out at McGovern's after the show. It was a good time.
Yeah, so just first name basis. But anyways, he didn't come on till 8:30, and it was a blast. I like Justin Bieber, or just call him Justin. And I like his music. It's pretty fun. But one thing I did realize, and my wife turned to me and said the same thing, is I think we are getting a little bit older. I still see myself as like a young maybe 20-year-old, but going in there, it was strange. I can definitely see the people are a lot younger than me, and I think they really get caught up in these concerts. I'm not a huge concert guy, so I just was like had to wait in line for my beers and see all these people like screaming going by, and then when Justin comes on, they just like scream their head off and stand up. I'm just sitting in my chair just trying to enjoy some music. So a little bit a little bit different atmosphere than I've been used to the last couple of years.
Let's be honest. You were right there standing screaming with your JB, the Beaver Fever t-shirt on, the Justin hat, and just screaming, just yelling, singing every single word. I know exactly what you were doing at that concert. Don't try to play it off.
Went and got my face painted. Just I'm a believer and well, anyways, that was my fun for the week. Anything cool happening over at your place?
So actually, we are getting on a plane today and heading down to Florida, and I could not be more excited. Just go on a vacation like that. We have not done that for a long time. Hannah and I went out to Vegas a couple of months ago, but we haven't done it as a family at least for a year, or maybe even a little longer. So it's going to be really nice just to get away, not have to work, and just enjoy the Florida sun. We're going to be right on the beach. We're going to have a pool at the condo that we're staying in. So yeah, just can't wait to get out of here.
How many days are you going for?
We are heading down today, get in at midnight, and then we are coming back on Sunday. So whatever that is, like 4 or 5 days.
So perfect. We can say this stuff online so any burglars listening to our podcast can't go to your house and
Yeah,
burglarize it.
exactly. That's why we always record in advance, Drew, so that because we have
Yeah.
this massive following, they can't come and just take over our stuff. That's exactly our strategy.
I know. It's so massive. I literally walk down the street and people ask me for my autograph, and I'm like, I just can't.
Actually, it's so big that you went to Justin Bieber concert and Justin asked you for an autograph.
He did. He's like, hey, want to come backstage? I really want to get your autograph. I was like, I don't know, Justin. I'm here with my wife on Mother's Day weekend. I just can't make it. I can't make it back there.
I'm a busy guy. I just can't do it, but it was great to see you.
Yeah. Tell your wife Haley I say hi. Oh, if I can add one more thing to this what's going on neighborhood segment, I want to thank Gary and Kate because they watched our kid while we went to Justin Bieber concert. So that was like one of the first times kind of that Jordan and I just went off, did something, and somebody watched our kids. So I want to say thank you to Gary and Kate for that because much appreciated.
Oh man, I thought you brought Tommy with you guys and you like tried to get him signed and all of that. I think your story just dropped like 4 notches in my eyes.
Why'd I have to bring that last part up?
All right, Drew, take us out of here.
Well, there's another week and another episode of the Neighborhood Money Podcast. It might be a little bit shorter one, but we wanted to give you guys our thoughts on the current environment and what's going on. What is our plans? What are some of the things you should be thinking about? We hope you enjoyed this one. We know it's fairly relevant. If you are extremely fearful in this type of environment, just remember long term and that fear will slowly go away and don't let it eat at you. If I can add anything else to this podcast, I just wanted to say that we have been increasing content on our Instagram page. We're doing at least 2 posts a day plus some reels. So if you want some little snippets of just motivational entrepreneur type of content, those posts will be on there as long as some personal finance stuff. As we said, we also have kind of that blog going, trying to do at least 2 to 3 articles a week just for some other thoughts of our heads. So if you're liking this podcast but still want some more consumable information, go check out our socials. And if you're listening this far in the episode, I just want to say thank you for listening, and we will see you next week in the neighborhood.